Welcome guys to the scalping tutorial. So now with intraday scalping, the major problem that most people face is overtrading. And the reason they overtrade is because they think scalping is all about trying to do as many trades for a small amount of profit as possible. And they try and do this on small time frames like 5 minutes, sometimes 1 minute, even 15 minutes. Which becomes a problem because those small time frames do have a lot of noise and you get a lot of fake out signals. So what I prefer is I like to narrow down scalping to something that can be taken 1 to 2 times a day, presents a good amount of profit in a small amount of time, and that's it. You can then close your screens, close your trading, and be done for the day. So something that I found which happens consistently in the SPX, also happens in many of the individual stocks, but definitely in SPX, which is a great tool to scalp just because of the notional size of the contract. This pattern is amazing in how many positive trades you get, and I wanted to put it out in front of you all. So something you will see is many of the people try to take an SPX trade right with the open volatility. The problem with those trades is sometimes you will see some form of whipsaw, or the premiums are going to be too high just because the market opening is volatile. So it's easy to get trapped in that. And that's why what I prefer, or the setup I see, is once the market opening volatility is done, after one or 2 hours, what you see is some form of intraday consolidation. What this intraday consolidation is sideways movement for 2 or 3 hours in a small range. And a breakout of that is amazing for SPX scalps because a breakout of that leads to increase in volatility. So since you're picking up your options when the volatility was low and you're taking it right when the breakout is happening, you will get a double whammy. You will get a directional move in your favor as well as volatility will increase. And that leads to quick, good gains for SPX. So I will point out some examples of this kind of consolidation, and then you guys can check it out for more, and we will point it out time and time again in the commentary so you guys can take SPX scalps. So something of this would be like this consolidation here. You see this on November 26th. We gap up, we open, and then many people would try and take a trade here and maybe get whipsawed out, maybe pay too much because of the high IV. But what's better is to be patient, wait for this 3-hour sideways consolidation right here in this area. All right, now I'm going to delete this box. You will see 1, 2, 3. 3 hours of sideways consolidation while this hourly 9 MA rises. And then if you take the break above this range high around this area, you'll get a solid 2 hourly candle move. Let's take another example. This one. So for example, in this case, we have this open, then we get this pullback candle, and we have this another candle. It's a 3 hours of sideways move. So you have this opening range of 3 hours, and the best one would be to take a scalp once we break above this range for a move higher into the close. Now, ideal would be when you take a break above this, you will do it to the next level. But usually I've seen is the candle that's breaking out will present a good opportunity, will move at least for 1 hour. So once you take the break, you can at least hold it for the entirety of one candle. However, how fast SPX moves, I think it would be easy to take profits even before that. So this happens time and time again. The only day, it's very few days which are extremely choppy where it doesn't happen. Like Wednesday of last week was a difficult case. I know I gave out a successful scalp in the options commentary, which was the break out of these 4 sideways candles. I think these 3 sideways candles, and I suggested a break above this, followed by a break below it. But the range wasn't there and we still made money. On Friday, I gave out an example where we had this sideways range, and now this one was on 30-minute chart, but you can, let me point it out. All right, this one, you have 4 candles sideways, And I had mentioned the range is 3948 to 3965, and a break out of this range would be a good SPX scalp. We broke out of this range and boom, 10 points, and that was a good SPX scalp. So be on the lookout for these kind of moves, right? Once the volatility has died down after the open, you get the sideways range. A breakout of this range is perfect for scalping. SPX options, you will get 1 to 2 opportunities a day, and that's all you need. The same thing can also be used for futures if you want to scalp for that. But you see this example again and again. It happens all the time. For example, this day, 3rd of November, you have the sideways range. You have these 3 hourly candles close by, and once we break below this range, that's your scalp of the day. Or this one, you have this opening volatility, then we have 4 candles sideways, hourly 9MA comes up, and once we break above this range, that's your scalp opportunity. Let's look at more examples. I will randomly pick a day and see if we find an opportunity there. All right, this one, for example. We have open next day in the range of the previous day. We consolidate for 4 straight hours, and then price around 11:30 starts breaking below, and that will be your scalp opportunity of the day. I hope this is starting to make sense. Do not try and play the action right at the open. You wait for the initial volatility to die down, for 2 or 3 hourly candles sideways. It presents a box, which is a box on a smaller time frame. It presents a range on the hourly charts, and you take the break out of that range, and that works out wonderfully for scalps. So this one, for example, you have on October 24th. So now I'm just picking out random days, but this happens so many times that you will at least get 1 to 2 opportunities a day. So in the afternoon, around 11:30, price just started to die down, which happens during lunch hours, right? It's not a surprise. Once we break out of this range, when people come back from the lunch hours, that's your scalp opportunity. I would usually just hold it for 1 hour, but SPX moves fast enough, you can even get out faster. So this is a pattern I saw quite a few times, and this is something I wanted to mention if you guys want to take advantage of it. If you add a few more stocks that are actively traded, like Tesla, Apple, Amazon, Microsoft, and QQQ and SPY, I think you can make a good system out of just trading these and scalping. Because these kind of opportunities appear time and time again, where you have range-bound sideways action into a rising hourly 9MA or falling 9MA, and you can take a scalp out of that. Hope this made sense. I know it wasn't too complicated. I just wanted to point out the setup, and good luck trying to find opportunities with that. I will mention opportunities in the options place commentary as well as the scalp of the day opportunity.